What if I told you that the stock market has not made a new all-time high level since the year 2000? Even crazier, it might potentially never make a new all-time high level.
You know, I know what you're doing right now, and I don't like it.
Of course, you're going to be thinking I'm completely crazy if you look at the S&P 500, the SPX, the NASDAQ, the Russell. They have all made multiple new all-time highs as recently as this past year in January, February. But actually, I'm telling you guys to have not gone completely crazy.
Oh, okay. Oh, you crazy.
Before we get into the video, remember to leave a like, subscribe below, comment. And if you feel like trading with me every single day, yes, live trading, we've been completely killing it. Make sure you hit the links down in the description below. So I'm going to be showing you guys the S&P 500 chart compared to the consumer price index. If you're not familiar with the CPI, it's actually a really important deal in the economy and the stock market. CPI pretty much just shows the inflation that is accounted in our economy. It was in the news, CPI, many times this past year or two since our inflation has been so high. We've had CPI readings as high as 8.9%. Now the CPI is a really big deal, and the stock market doesn't take into account the CPI involved in its price. So there's actually a really important chart out there, which is S&P 500 adjusted by CPI. If we take the CPI, so wherever inflation has been, and we add it to S&P 500, so pretty much imagine $1 a day. We all know that if you go back 20 years, $1 a day is worth much less than $1 from 20 years ago because the money supply has gotten much bigger as we print more money. So I think this chart is actually really important because the power that the S&P 500 has had has actually been decreasing since the year 2000. If you can see from this chart, from 2000 to 2001, a bubble burst of the technology, the dot-com bubble, we're actually seeing that the stock market has been pretty much almost in a downtrend in the last 22 years. We can take a look that back in 2008, it also made a potential push that was trying to go for all-time highs, but crashed down. And actually, we've crashed down and have not been able to break that level ever since then. Now, this does not fit into pretty much a financial narrative that talks about a bull market and us breaking all-time highs and just to keep investing every single year, because that is the best way to beat inflation. This chart actually proves otherwise, that this inflation is not being beaten by S&P 500. Actually, the S&P 500 is getting beaten by inflation. Now, that is not also completely true, because the way this S&P 500 adjusted by CPI actually works, it just means that the money that's been invested in the stock market, the value the stock market has had, it's not as powerful as it was back in the year 2000. In the year 2000, there was a lot less money to go around, a lot more money, a lot more of that percent of the money that was around was invested in the stock market. Nowadays, that percent is actually much less. This chart really amplifies the lack of purchasing power that the investors have had in the S&P 500. There's not been as much enthusiasm or strength as investors have been since the year 2000 to 2001. I think potentially if we ever do see a level that we break that 2008 resistance for a push back to 2000, that might be one of the greatest bull market rally we will have, but we're just not there yet. So what should we be doing? Should we stop investing in the stock market? If we begin to scam this whole time, we're actually been losing money. That if we just, if we add inflation to this, investing in the VO and, any other popular ETFs has been just a waste of time.
We are doomed.
Well, it really hasn't, because if you had just hold on to your pretty much hard cash, you would have lost much more than just what you lost with the S&P 500 inflated by the CPI. We also have to keep in mind that when we're investing in the stock market, we're not just investing when it's going up, we're also investing when it's going down. So when it finally decides to turn and start pushing higher, we end up making profits anyway. So my strategies have not changed. I still do invest long term in stock market, but I do think this chart is very important to understand, because it shows how much we are really being taken back by inflation without us seeing it, and nobody's talking about this chart as well. Also, this chart highlights how important it is to really diversify your portfolio. Take a look at the crypto market and the real estate market. Both have crushed inflation by a landslide, while the S&P 500 and stock market have been lagging behind. But now your question is most likely going to be, Antonio, what the heck do I got to do? I want to beat inflation. I want to outperform the markets. How should I be investing?
Okay, what do I do?
And let me tell you, if you're a long-term investor, you're a passive investor that just simply DCAs into their VO or their retirement fund, their 401k, unfortunately, you're just not gonna get rich. I'm sorry. There's just no way for you to outperform the statistics. If you actually do want to take your portfolio serious, you're gonna end up having to educate yourself, which might take some time, but I think that a few hours of education will greatly amplify how much your portfolio can grow. in the coming years. But if you're watching this video, more than likely you're willing to invest in education and kind of understand how the economic cycles work. We have to understand to outperform the economy, we gotta be a step ahead of its cycle. And both the stock market and the economic have cycles. Now there's 11 sectors in the S&P 500 and pretty much in the economy that goes from technology to consumer staples to gold to silver. There's all these 11 sectors that compose S&P 500, and certain sectors do well at certain points in the economic cycle. Now, I would argue there's a 12th sector out there, which is not yet or officially yet a sector, but I will add cryptocurrency, Bitcoin, Ethereum, and so on as being the 12th sector of this economy. And the 12th sector can probably pretty much be categorized as the same way as technology gets categorized. So many people will tell you you need a balanced portfolio with all of these 12 sectors to be successful. And yes, that might be true. You might have some mild success with that. To be maximize your success, you actually would have to focus the certain sectors depending on where in the cycle we are. For example, we have high inflation. A lot of value stocks have done much better. A lot of you guys might be holding growth stocks like Tesla, PLTR, NEO, all these companies that require a lot of cash on hands to grow have actually been getting destroyed. But the other companies, for example, Coca-Cola, have been actually doing really well in these economic settings because they have a lot of cash in hand, and investors will rotate from growth and high risk stocks to more value stocks. So if you had anticipated that the economy was probably going to go in high inflation, and there's many ways to do that, just by pay attention to the news. Simply, you could have been rotating your growth stocks into value stocks and have profited on both. And then once your value stocks go up, you can rotate them back into growth stocks. That's very simple actually to do. It's not as hard as you might think. You might think, Antonio, you gotta go to Harvard, you gotta be a financial degree, you gotta work for a hedge fund, you gotta do all those things to even, be messing around with those things that just don't dollar cost average and long-term invest. Sure, go ahead, do that if that's the way you wanna do it. I'm just gonna give you guys some tips if you do want to outperform the S&P 500. So we have to understand the market cycle. Of course, in the market cycle, you have a stock market top, and then you have its way down, which will be a midway into a bear market, lower bear market, the bottom of the bear market. You have an early bull market, mid bull market, and then the top of the bull market. You just kind of cycle as a big circle from up to bottom. And if you analyze and understand where we are in a certain point of the bull market, just by simply taking a look at the big index funds like S&P 500, you can kind of see where you should be rotating your portfolio into. For example, consumer non-cynicals, that's early bear and later recovery, which means rising overseas reserves, rising larger caps, and rising commodities. Then you could be rotating into consumer cyclicals, which is the late bear, and peak, which would be early recession, when kind of where we are right now in the early stages of the recession. Then once you're in early bear and later recovering, you will be moving your portfolio into healthcare. Then when you're in early signs into recession, which will be the late bear and the peak, then you'll be rotating into financials, which will be like your JP Morgan, Visa, MasterCard, into the late bear market period. Then finally, when you're finally in the early stages of a bull market, you'll be rotating into technology, just like we saw in 2020, 2021. Technology is really doing well because as the economy starts kicking back up, there's a lower interest rates and there's less, more easy ways to get money for companies to grow, so they do really well. Then once you're in the late stage of a bull cycle, you'll be rotating out of technology and moving to basic industries. Then once the interest rates are rising, you finally be moving back into capital goods between the mid and late bull market. And at the very top, you'll be investing into energy, just like we saw recently. Oil and energy has been outperforming the rest of the market in the last 6 months, while everything else got destroyed. The reason why was because we were at the top of a bull market, heading slowly into a bear market, in the early stages of a bear market, and the early stages of a recession. Now, the first time you might look at this, you're like, Antonio, there's no way to time the market. Time the market is too difficult. I'd rather be spending time in the market.
I can't do this.
Sure, go ahead, go do that, but I promise you guys, try to just apply this even if it is on a paper trading account. I promise it will not be as hard as you may think. Just if you simply follow the news, follow what the feds are saying, and kind of just, even if you just look at S&P 500 charts, you will be able to tell where we are in the bull/bear cycle. Now next is, Antonio, how do you find these tickers depending on where we are in the cycle? If you head over to finviz.com, there's actually a really nice chart that shows you exactly technology, services, basic material, healthcare, industrial goods, utilities, and so on. That shows you all of the 11 sectors of the S&P 500, and it actually shows you the top tickers in the sectors, and most likely those are going to be your best bet on where to invest your money too. Now let's talk about crypto. Where should you be investing crypto into this cycle? You should be investing crypto just the same way you would invest in technology, which is into early to mid stages of a bull run. So once you hit the top of the bull run into the bear market, your crypto is going to get destroyed. Just very a quick summary to what you will learn if you went to finance school and how to invest with a hedge fund. This is how they rotate their portfolios out of these 11 sectors, and maybe soon they'll be adding this 12th sector. This is how they stay beating the stock market. Well, even though most hedge funds don't beat the stock market because they just over leverage and lose a lot of money other ways, that's how they should be investing your hard-earned money if you give it to them to trade for them. This is also how I try to stay ahead with my long-term portfolio. If you're in our Discord chat room, I told you guys I sold almost all my technology in the early January of this past year, which ended up being really good and rotated heavily into oil and gold, which have done really well ever since. As always, this is not financial advice. I'm just giving you guys a little summary on how you can potentially start outperforming your S&P 500 investment, and with a little bit of research and a little bit of education, really take your portfolio to the next level and start performing every single year the S&P 500. Yes, it will be difficult. Many of you guys might probably fail, but I hope you guys take this video to kind of expand on your education on finances and stock market and crypto market of that. Now, if you learn more about stock market, crypto market, make sure you subscribe. It takes me all the time to make these kind of videos and edit them. And as always, peace.